Okay, real talk. How many of you are sitting on the sidelines, watching the stock market do its thing, and wondering if you're missing out? Like, you see those headlines, you hear your friends talking about their gains, and you think, should I be doing that? Is it too late? And then, the big question hits, where do I even start? You've probably heard the names Robinhood and Acorns thrown around. They're like the gateway drugs to investing, right? Easy to use, mobile first, targeting those of us who maybe don't have a Wall Street pedigree. But which one is actually better? Which one is going to help you grow your money without making you feel like you need a finance degree to understand it? That's what we're breaking down today. Because let's be honest, we all want to build wealth, but we also want to do it without getting lost in a sea of jargon and fees. Now, before we dive into the nitty-gritty, let's set the stage. We're talking about two platforms designed to simplify investing, but they approach it from different angles. Robinhood is all about the DIY investor, the person who wants to pick their own stocks, options, and even crypto. It's got that sleek, modern interface, and it's built for speed. On the other hand, Acorns is more about automated investing, the set-it-and-forget-it approach. It's designed to take your spare change and turn it into long-term growth. Think of it as investing on autopilot. Let's start with Robinhood. The big draw here is commission-free trading. That's right, you can buy and sell stocks, options, ETFs, and even cryptocurrencies without paying a commission. That's a huge advantage, especially if you're trading frequently. The interface is also very user-friendly. It's clean, intuitive, and designed to look good on your phone. You can quickly see your portfolio, track your investments, and place trades with just a few taps. But Robinhood isn't just about the free trades. It also offers access to fractional shares, which means you can buy a slice of a company even if you don't have enough money to buy a full share. Want to invest in Amazon or Google, but don't have thousands of dollars? With fractional shares, you can buy a piece of the pie for as little as $1. That's a game changer for beginners. Now, let's talk about the downside. Robinhood's simplicity can also be its weakness. Because it's so easy to trade, it can encourage impulsive decisions. It's like having a casino in your pocket. You see a stock that's trending, and it's tempting to jump in without doing your research. This can lead to losses, especially if you're not careful. Also, the platform has had its share of controversies, particularly around how it handles order flow and the gamification of investing. It's important to be aware of these issues and to understand the risks involved. Moving on to Acorns. Acorn's core feature is its roundups functionality. It links to your debit or credit card and rounds up your purchases to the nearest dollar. That spare change is then invested in a diversified portfolio of ETFs, based on your risk tolerance. It's a brilliant concept, because it makes investing feel effortless. You're not actively making decisions, you're just letting your spare change work for you. Acorns offers several different portfolio options, ranging from conservative to aggressive. You can choose a portfolio that aligns with your financial goals and risk tolerance. And because it's investing in ETFs, you're getting broad diversification, which helps to reduce risk. Acorns also offers other features, like Acorns Later, which helps you invest for retirement, and Acorns Spend, which provides a checking account and debit card with smart deposit features. It's building an ecosystem around micro-investing. But Acorns isn't perfect either. It charges a monthly fee, which can eat into your returns, especially if you have a small account balance. For example, the basic Acorns personal plan is $3 a month. That might not sound like a lot, but it adds up over time. Also, because it's focused on automated investing, you don't have the same level of control as you do with Robinhood. You're not picking individual stocks, you're relying on Acorns algorithms to manage your portfolio. So, which one is better? It really depends on your investing style and goals. If you're a hands-on investor who wants to pick your own stocks and actively manage your portfolio, Robinhood is probably a better fit. If you're looking for a simple, automated way to invest your spare change and build long-term wealth, Acorns is a solid choice. Let's break it down further. If you are a beginner, and you want to dip your toes into investing with a very small amount of money, Acorns is great. The roundup feature is genius, and it helps you get used to the idea of investing without having to think about it. If you want to invest for retirement, Acorns later is also a good option. If you are a more experienced investor or you are looking to actively trade, Robinhood is a better option. The commission-free trades are a big plus, and the platform offers a wide range of investment options. If you are looking to trade options or crypto, Robinhood is one of the more accessible platforms. Now, it's crucial to understand the fees. Robinhood is known for its commission-free trading, but it does have other fees, such as for its Robinhood Gold subscription, which offers access to margin trading and other features. Acorns, on the other hand, charges a monthly fee, which varies depending on the plan you choose. You need to weigh these fees against the potential benefits of each platform. Let's consider the educational resources. Robinhood offers some educational resources, but they're not as comprehensive as what you might find on other platforms. Acorns, on the other hand, focuses on simplicity and automation, so it doesn't offer as much in-depth educational content. If you're a beginner, you might want to supplement your learning with resources from other sources. Security is also a critical consideration. Both Robinhood and Acorns use industry-standard security measures to protect your data and funds. However, it's important to remember that all investments involve risk. There's no guarantee that you'll make money, and you could lose some or all of your investment. So, do your research, understand the risks, and invest responsibly. In conclusion, Robinhood and Acorns are both valuable tools for investors. But they cater to different needs and preferences. Robinhood is for the active trader, while Acorns is for the passive investor. If you're still unsure which one is right for you, consider your investing goals, risk tolerance, and time commitment. And remember, you don't have to choose just one. You could use both platforms to achieve different financial goals. Ultimately, the best platform for you is the one that aligns with your individual needs and preferences. Take some time to explore both platforms, compare their features and fees, and make an informed decision. And remember, investing is a long-term game. Don't get discouraged by short-term fluctuations in the market. Stay focused on your goals, and be patient. 1. BigPayMe.com. BigPayMe.com. With that said, thanks for watching, and until next time.